All right. Well, we have everybody starting to log in, so I'm just going to give everybody just a minute. There we go. Now I'm starting to see some names. All right. I see some new names today and some frequent flyers, I guess you could call, to our webinar. So it's good to see you guys again. All right. Well, let's go ahead and get started. I'm going to welcome you guys real quick. Before we get started with the actual webinar, I do want to let you guys know we are recording this, so you can come back and visit anytime. If we will take questions throughout the program, I'll probably reserve them for the end unless they make sense to interject while we're discussing each topic. You can do that by clicking on the Q&A speech bubbles down at the bottom of your screen. Click on that, and then you can go ahead and type in your answer. I'll read it out loud to the group and get an answer for you. If you have any specific questions regarding anything that's not related to the actual webinar, you can click on the chat function and reach me directly, or you can make a comment to the group by clicking on the chat function and doing a comment to the entire group that way. And then I think that's it. We're going to go ahead and get started. I want to welcome you guys, to each and every one of you, to our 6th episode of our Builder of Choice series. I'm so excited. Today, we're talking about the proven financial strategies to attract home buyers. So I want to remind you all that we are talking about different ideas and strategies that you can use to help your buyers so that they can get into the home that they have been dreaming of. So with that, I'm going to go ahead and get started. I'm Emma Jane. I'm here with my senior consultant, Jim Weigel, and our guests, Scott Baughman from Premier Homes and Roland Nairnsey of New Home Sales Plus. So a couple of weeks ago, we talked about building homes that your buyers could afford by making sure that we're not over-speccing them. And today we're going to talk about how to get your buyers into a home so that they can afford it, and some ideas to help them do that. So with that, I'm going to start with Jim. Jim, can you tell me what are some of the challenges are your customers? Actually, hold on, rewind. I wanted to have you guys introduce yourselves first. So I'm going to start. Jim, will you introduce yourself, and then we'll go to Scott and Roland. I want you to tell us a little bit about yourself and why you love being part of the home building industry.
Oh, fair enough. We're starting with Jim, though. Yep.
Yep. Go ahead, Jim.
I am a senior consultant with Shinn Consulting. I've loved being a part of the home building business. It doesn't seem to get out of your blood. Was a builder for years, and then after we sold our company, just couldn't stay away from it, and continued consulting with builders to help them become more profitable and less frustrated with the business. Along with their trade partners and their customers. So that's what we're trying to help people with.
Oh,
thank you, Jim.
All right.
Go ahead. Go ahead,
yeah,
Roland.
I'm Roland Nairnsey, president of New Home Sales Plus. I'm a sales trainer and consultant only for new home sales. I'm very blessed and lucky to travel all across the country and work with builders in many states and get that perspective. So I love what we do because we get to help people thrive and succeed. And when you see the builders succeeding, the salespeople and managers doing well, there's no greater feeling than having helped those companies to succeed. So I'm very happy to be in this great industry. That there is no better industry that we could ask to be in. We're very lucky and blessed. So thank you for having me on the show.
Thank you, Roland. And Scott, will you go ahead and introduce yourself?
Sure. I'm Scott Baughman. I work for Premier Homes. We're based in Pueblo, Colorado, a little town just south of Colorado Springs. We build homes in Pueblo and Colorado Springs, but I've been in this industry, the residential home industry, since 1986, and I've been in new home sales management since 1999. And it's really fun to help people buy a new home. The excitement that people have when they're getting a home and it just happens to be a brand new home is really unparalleled to watch the smiles and the happy times for people. So I feel blessed to have been in this business as long as I have.
Oh, thanks, Scott. And I would say that's so true. I know Chuck and Emma, our founders here at Shinn Consulting, believe that too. I remember growing up as a kid, growing up on the job site, and the most special moments were watching people move into their homes and really start their lives and their families together in their brand new homes. So I'm glad to have you all here. So with that, let's start with currently in our market. Again, we talked about this last time, but we always have a challenge. It seems like since 2020, we've had a challenge every 6 months. This is no different. We're continuing on that path. Change and challenges are the way of home building. They're just bringing it to the forefront. It's always been there. And now we're just actually seeing front and center for everybody. But Jim, what are some of the challenges our customers are facing right now with our buyers affording to buy a home?
Sure. One of the challenges we're trying to get used to is that there aren't as many existing homes or used homes available for purchase. And so we actually have a higher demand for new homes than we would otherwise have in most market situations. And that's fairly unique over the past even 60 years. Within that, though, there continues to be cost pressure on our construction costs, our interest rates to finance the homes, as well as land costs and the costs with cities' municipal fees. So the costs keep going up. So we have to keep raising our prices a little bit to try and take care of that. But then the big news that everybody has is interest rates have almost tripled in the past 3 years, and they keep fluctuating pretty violently from month to month. And so that causes people to wonder, can they afford a home? And so a lot of people just drop out of the market. They don't even consider looking for a new home because they don't believe they can afford it, or people tell them they should wait and house prices will go down. Both of those, we need to combat those challenges. We need to help people be able to afford the home with a lower interest rate and a payment they can afford, or a more certain way of securing that interest rate in that payment.
Well, thank you. Scott, I know that you've been working with some clients and buyers, and you've started using some new tools. Can you share a little bit about what tools you've been helping your buyers with and how they're helping your buyers afford their home, and how is this helping you maintain your velocity in sales in your organization?
Sure, absolutely. So essentially May 1st of last year, 2022, we had people competing over our stuff. We would release a building and we had multiple offers, and it was kind of a nice environment to be in as a seller, not so much for buyers, but things were great. 30 days later, really at the end of May, the interest rate had essentially doubled over that 30-day period. And we went from selling like hotcakes to selling really nothing. And when I started in the business in 1986, interest rates were 18%, and we figured out a way to sell homes. Fast forward to today, I was trying to figure out what we could do. We had two choices. One is lower the price significantly to get a payment back more affordable, or find a lender that would do what we call a forward commitment, which is where we do a permanent rate buy down. And I literally called 68 different lenders before I finally found one that would talk to me about doing forward commitments. And we have been successful in buying the rate down to 3.75% fixed for 30 years. That's on VA and FHA loans. There's two different, there's the conventional side and the government side. And our 3.75%, once we could convince buyers and realtors that that was a real rate, which a lot of them, I mean, interest rates were at 7.75, approaching 8. And so a lot of them thought our 3.75 wasn't real. But once we convinced them that it was a real rate, it turned the sales flow back on like magic. And we had our best sales month ever in company history back in April, our best closing month in May, as a result of these forward commitments. But that's just one of the tools that allowed us to become really what we like to say, builder of choice for our buyers. And the reason they chose us was because of the much lower payments that they were able to get as a result of that forward commitment. We also looked at 3-2-1 buy downs and adjustable rate mortgages. And while those are good tools for some builders and some buyers in some environments, it just, what worked best for us in our environment was that permanent rate buy down.
Yep.
Absolutely. Yeah. Um, and Roland,
Yeah.
just to kick off the conversation a little bit more, what are some of the challenges that you've been working with builders across the country as well, particularly in sales management and in the
Yeah.
sales departments? What are some of the challenges that you've been seeing with the builders that you're working with, and what tools are they using? Similar tools?
Yeah. It's a great question, and yes, I think the what happened was when the dust settled, the mortgage companies started working with the builders and coming up with these temporary buy downs. You know, the 3-2-1 kind of stuff, and a lot of the companies I work with would offer sort of a use as you choose incentive. You could either lower, you could get help with closing costs, or a credit at the design studio if you're building a home, or a temporary buy down. We found that those temporary buy downs don't really have much traction. The buyers are savvy enough to say, well, yeah, it's just a band-aid. It's not really what we want. And besides, they had to qualify at the higher rate anyway after 3 years. So when when Scott, I learned from Scott to work with this company that they're successfully doing forward commitments, it has been a real game changer where it's a permanent fixed rate buy down. And so I think the challenge initially with some of the companies that adopted the permanent buy down is really convincing people that it was real. Yes, we really mean whatever the rate you choose to buy it down to. Let's say it's 5%, but that really is 30 years. It's not a temporary buy down, and training the salespeople to really explain that correctly to their buyers, that this isn't what you think it is. It's not this 3-2-1 deal. It's really fixed for 30 years. And let me show you what that means to you over the life of your loan. I have a free financing app that's easy to show it, and we just did it on a $400,000 loan that you buy down from 7.5% to 5%, you're going to save $222,000 over 30 years. That's half the investment in the home, not to mention the appreciation you get. So, you're up by a whole bunch of money there. So I think just really, if you're going to do something as bold as a forward commitment and invest in that, training the salespeople to really understand it, and marketing to really market it correctly, and put it out there, and then explain those differences and educate your buyer. Does that make sense?
I think so.
Good.
Now, Scott, I have a quick question for you, kind of in the same path. When you were faced with the challenge of, like, we were at like what, 3%, and then all of a sudden at 6%, what were some of the thought process, or how did you go through the process to find, not only decide what tools you wanted to look at? Obviously you have experience because you were selling back when the interest rates were crazy high, but what were some of the process you guys went through as a team to analyze different tools, know where to go, what kind of questions to ask? Because I feel like this is kind of a new territory, especially for people who've just entered the market since 2020, when we've had unrealistically low interest rates. So what were some of the process you went through to try to go in that direction?
Well, that's a great question. And fortunately for me, when I first got into the business back in 1986, after a couple years of being a real estate broker, I had worked with some lenders that, screwed up my transactions. I didn't really have buyers that were qualified. And so I said, I really need to take a look in the mortgage finance world. So I actually left the brokerage side, went into mortgage finance for a couple years. And that's where I learned about a lot of different financial tools that buyers can utilize to buy homes. One of those was a forward commitment, which we did a lot of those back in the late 80s. And so when the interest rate essentially doubled in May of last year, and we sat down and figured out, okay, we were selling extremely well when the total monthly investment was X, whatever that was. And now, because of the interest rates essentially doubling, the monthly investment was considerably higher. So that really left us with a couple choices. One, we could either lower the price significantly, and in our world, even if we would have lowered the price $125,000, it still wouldn't have gotten the payment down as low as it had been at the lower interest rate. So we looked at, like Roland was talking about, the 3-2-1 buy downs, which the challenge there is the buyer has to qualify at the highest fully amortized rate. We looked at adjustable rate mortgages, and based on all the research we did, a lot of it came from the National Association of Home Builders. Buyers just don't like adjustable rate mortgages. They want more certainty than that. So that left, what can we do in terms of a permanent rate buy down? And I called a bunch of different lenders, And I was shocked to discover that a lot of them didn't even know what a forward commitment was. They'd never heard of one. And I'm like, you're in the business. And then the ones that I did call that did forward commitments, they or knew what they were, they didn't think that the interest rates were going to stay as high as they were for as long as they have. And they thought it doesn't really make sense to tool up that machine in this environment where the rates are going to come back down. And so then I finally did find a lender that does the forward commitments. And you really just have to shop around. The lender we found was great in that they would do a forward commitment for as little as $1 million, which for us would have gotten us basically 2.5 home sales in our typical price range, all the way up to $40 or $50 million. They would do them for a 30-day transaction, a 30-day commitment, all the way up to a 365-day commitment. And so we had to sit down and analyze what the cost structure was. And, you know, what we finally came up with was a 60-day commitment for $2 million at that 3.75. And that's what really worked for us. But you really do have to shop around and find a lender that has the products available. The other thing that I really like about the lender that we found is they do have a float down option. So the cost for the forward commitment is based on the day you buy it, the day you lock it in. Interest rates fluctuate every minute of every day. And so once we pull the trigger and actually buy the commitment, if when we're closing those 45 to 60 days later, if the rate has come down, then our cost for the commitment actually goes down. If the price for if the rates go up, we're protected, we're locked in at that rate on the day we bought it. So it really is kind of the best of both worlds. But it did require some analysis and shopping around. Really, the final analysis is what is best for the home buyer in terms of what do buyers want. We're not trying to just cram something down their throat. This is what we offer as a home builder. This is really, the best arrangement for each buyer. And then the other thing that was really cool is the lender that we found, they truly became a partner in terms of they helped us educate the realtor community with regard to what a forward commitment is and how it benefits the buyer. Roland taught me a long time ago, we don't want to be a feature dumper. We want to share the feature, which is the low rate. But the benefit of that low rate, as Roland just explained, is you can save hundreds of dollars a month, thousands, tens of thousands. In the example Roland shared, a couple $100,000 over the life of a 30-year loan. Right. But our loan officer really came in and helped us educate the realtors, helped us educate the buyers. And the really cool thing from a home building perspective, as much as we do love our realtor partners, we like to have our realtors help with our sales, but we were able to go into, just in our example, the school district office, the hospital, the police station, the fire station. And we were able to say to these people, we want anybody who works here at the fire station, the police station, District 60, whatever, we want to offer you this 3.75% rate. And when we first walked in, they're like, yeah, we don't want salespeople in here selling us stuff. But when we shared the 3.75% rate on any of our homes, we literally went from being an unwelcome pest to a welcome guest. Mm-hmm. And either the person that we were speaking with said, tell me more about that, or they knew somebody that they worked with that might be able to take advantage of it. So it really was great. Didn't mean to be so long-winded in my answer to your really simple question.
That was all great information. And what I like about that is that there's a couple things that you said that are very key. First of all, making yourself the builder of choice, finding what's best for your customers so that you're the easiest and the most, the best builder to work with in your market. I mean, that's what builder of choice is all about, right? It's all about making sure that you're the builder that buyers want to buy from, trades want to work with, employers want to work with, and lenders want to work with. And by doing that process, you set yourself up as a builder of choice. The other thing that I think is key in what you said is that you weren't necessarily trying to be the expert in all things finance. You were going out and finding the information that you needed and partnering with your lender to find a solution that worked best for your buyer. So there's a couple really important pieces that you talk about in that little segment that I think is really important for people to take out from that, and really going out and reaching out into your community and say, we're here to help you buy a home. If right now it's really hard for people to buy one, we found a solution that's best for you. So right. I really like that. Hey, Jim, I have a couple questions. You've worked in the lender world as well. When builders are going through this process, what are some questions that they need to be prepared with when they're approaching a lender, or prepared to answer when they're working with a lender on a solution like this?
Sure. And when Scott was talking about the 80s, that's when I was in the savings and loan and the commercial lending business. And we were actually providing those forward commitments, and another tool, which we can talk about a little later, construction to permanent loans. And both of those were, the forward commitment world had been going on for years, and almost everyone knew how to do that. So a lot of public builders these days are using forward commitments. And so what we're talking about is having private builders and smaller builders learn the exact same thing. And I was just talking with a few different mortgage lenders over the past couple of weeks in big mortgage companies. You would recognize them very easily. And although they have not been doing it for years, they all are investigating it. And I would expect quite a few lenders to be coming out with forward commitment programs for all kinds of builders this next year. The risk, there's a couple things that a builder needs to consider. One is they need to have a good enough gross margin to be able to afford the forward commitment. And so if you're much below 20% gross margin, and when I say gross margin, that means the sales price minus the cost of the land minus the cost of building the home equals your gross profit. And we just take the gross profit divided by the sales price equals a gross margin. So if that gross margin is much below 20%, most people's operating expenses are about 18%. So they can't really afford to pay very much for this. Otherwise, they're losing money. If your margins are where our targets are and where many of our clients are, 30% or more, then it's pretty much a no-brainer that you can use. Not all of your sales need to be subject to a forward commitment, but enough. So a couple things to consider is, how much do we want to rely on spec homes, starting homes without being sold? If you're going to do that, at some point, you might have an interest rate spike up, and then you're stuck with those homes for a while. And this would be a great way to mitigate that risk, is buying some forward commitments. The other thing is to really look at your construction cycle. How long does it take you to build that home? The shorter it takes you to build that home, especially from around the drywall stage until it's ready to close, the shorter the forward commitment is that you need to buy. And they're less expensive. Only a 30-day commitment is way less expensive than a 60-day or a 90-day commitment. And then they start getting way more expensive after 3 months. Because now that lender who's issuing the forward commitment is taking on the risk that interest rates rise. So those are the three big ones. Is do you have the gross margin? Do you have a specs where it makes sense for you to do that? Pre-sales work as well, as long as you are building the home very quickly. You can certainly take advantage of forward commitments on pre-sales as well. But you need a good cycle time, a good gross margin, and have some sort of specs or some strategy for using it for pre-sales.
That's excellent.
I would say the other risks Roland can talk about, and Scott was talking about more. It's basically the risk that people don't believe you, that it's too good to be true, which is completely different from the way it was back in the 80s and 90s. Everybody just knew this was the way it worked. This was not an unusual thing to do, but now we have to pass the credibility test.
Well, that brings us down to that question that we have. How do you educate not only your buyers, but your sales team and your realtors in your community so that they do believe you? So they do believe this is an option and this is a solution for high interest rates and too high of a monthly payment. What are some ways, Roland, why don't you start?
Sure.
What are some ways that you can train your people to believe you?
Yeah, we were talking about it before, but training the salespeople to really understand what we're talking about and what that difference is, and then if you notice, anytime there's a saving, you want to amplify that. So you would show your customers what the monthly difference is, and then amplify that over 30 years and show them that. And then the same thing with your realtors. Scott was talking about the company that he works with a lot, where that mortgage company will actually go out and educate realtors with them, which is amazing that they put that time and energy into it. So I think we're in markets where really the realtors are suspicious of that. Something else that is something that we could be doing anyway, whether the rates were high or not. Quite a few builders I work with are doing regular home buying seminars. There's a builder out west, for example, that I get their emails and they do them every single month, which is the idea of it. And so if you're doing a home buying seminar, you're going to draw a few people every month in under the guise of education, a few customers, I mean, under the guise of education. And then what is it you talk about? It's how to buy a home, whether it's now or in the future. And people and realtors will come out to that, by the way. And in that, when you do a home buying seminar, it's ideal to have your realtor partner with you. So, the new home sales people or manager will talk about how to build a home and buy a home. And then your realtor partner will talk about the process to go forward, how easy it is. Oh, and this is what a forward commitment means. So home buying seminars, I think, are a great way of generating traffic. So many builders are doing them, and then that maybe evolves into like a muddy boots tour where you go out and look at homes the next month. That what I've found is you do it regularly, like maybe every other month at a minimum, and put it on your website so people know that there's this educational opportunity. But yeah, really educating and partnering with your with your realtor, with your mortgage partner to educate the public on that.
Scott, how are some ways you've partnered with your lending company to help you educate your buyers, your community, your salespeople, realtors?
Well, the lender that we've partnered with, they already had an extensive library of stuff, material that would help educate both realtors and buyers with regard to the mortgage finance process. And so we just retooled some of that stuff. And it started off as a real challenge with regard to getting people to believe that it was a real rate. We had one realtor who called me up and he texted me 3 times, talked to me twice. What's the catch? I'm like, there is no catch. When does the rate adjust? Never. When does it balloon? Never. I finally started kidding around. There is a balloon rate at payment 360, which is the end of a 30-year mortgage when you make that 360th payment. But he brought a buyer where mom and dad, for both the husband and wife, young couple, they both showed up thinking, what's the catch? And it wasn't until we walked out of the closing where they're like, there really was no catch. And then what we did is we were able to get testimonials from the buyer and from that realtor, and we sort of used those. And as we closed more, we got more testimonials from more realtors and more buyers. And the people that they worked with, once you find a big real estate office where somebody's had a successful transaction, they can really become your biggest fan. And so some of our realtors have been really big in that. And then in the non-realtor world, where we've gone into some of these businesses like the police station, the fire station, or whatever, once you close one with those people, it really becomes, potentially a flood buyer. Our lender was in one of our hospitals down in Pueblo, and he gave a presentation just real quick to somebody in HR that said, hey, if you have anybody moving here, please use this as an advantage. And there was a lady who was just starting that was a nurse. She bought one of our houses, and then she told 4 other nurses who all bought one of our houses. So it just sort of became this snowball effect that worked very well. One of the things that Jim said that I just wanted to touch on, and I feel very fortunate to work for the company I work for, because we've been a client of Shinn Consulting for many years. And it's as a result of what we learned from Shinn that has allowed us to have the margins that allow us to be able to do things like buy the rate down, which helps us become the builder of choice. So it's that the higher margins that we've been able to get as a result of the education that we've received from Shinn Consulting. And then once somebody comes through one of our models, I can't tell you, and I've done several mystery shops just to check on competition, but things like we've learned from Roland, where a salesperson has to have a deliberate process once somebody walks through the front door of the model. It can't be, feel free to look around. I'm here to help. If you have any questions. No, we, like some of the stuff I've learned from Roland, we treat the model like it's a Hollywood set. Where are we going to stand? What are we going to say? How are we going to say it? What process do we use to convert that buyer prospect into a buyer that actually will write up an agreement and then be a happy buyer who goes on to become one of our raving fans. So it's a whole package. And we've got two people here, Shinn Consulting and Roland, who have helped us get where we are.
Thank you.
But anyway, didn't mean to be so long-winded once again. I'll try to be more concise, but anyway, that's what we've been able to do.
Oh, that's wonderful. That's great. Thank you so much for sharing that. I have two questions that I'm going to interject, and then we're going to move on to the next thing. First of all, Scott, I'm getting a direct question about which mortgage company you're talking to.
I'd like to take that, Emma Jane. We talked about that when we were preparing for this webinar, as to whether we were going to share the names of the mortgage companies that we know who are doing this, and we decided not to. That's why we're being a little bit cryptic about this, and there are a few reasons for that. Two of them are, one, there's a competitive advantage to this, and I had spoken with the owner of Scott's company, and he's reluctant to pass this on to people who may be his competitors at this point. It's not to say he wouldn't, but I'm not interested in just telling people what this competitive advantage is when we don't even know who the people are. The second part is that we need to make sure that you're ready to do this. If you do not have the margins, if you do not have the relationship with the lender, if you don't have the reliability, the construction schedule to deliver those homes, you're just going to kill yourself buying forward commitments. You will cause your business to go south way faster because there are some tremendous risks. If you can't use those forward commitments and deliver the home and deliver the customer, you lose a lot of money real fast. So we got to be very careful on that. It's a sharp edge tool. And then I'd say the third thing is we need to be able to talk with these two mortgage, at least three mortgage lenders that I know of, and the one that Scott and Roland know well, to make sure that they're prepared to work with people all over the country, or who we might refer them to, make sure that they're going to handle our clientele well. I know they're handling Scott's work well, and many for Roland, but we just need to make sure that works well too. So that's why, I'm sure if people want to reach out to Scott and Scott clears it with his boss and says it's okay to say, maybe that's all right. But I just want to respect the competitive advantage that Scott and his team have put together so well.
That was a perfect answer.
If I could just follow on real quick. I tell everybody, if you're a competitor of ours in Pueblo or Colorado Springs, none of this works. Don't pay any attention to anything you're learning on this. It's just a waste of time. I kid around about that. But Jim is exactly right, because I have talked to our lender who has, provided this product to a few builders who weren't ready for it, who did pull the trigger on it, invest a bunch of money, and it has turned out to not be a good thing. So Jim has hit the nail right on the head with regard to, no pun intended there in the home building, but you really need to do some analysis. And of course, Jim is well prepared to do that, but you do need to do some analysis to really find out, does this work for you? Will this work for you? And if it does, then you really have to have a system in place. You can't just buy the commitment and then, hope and pray for the best. So pay attention to Jim's wise counsel here with regard to do some analysis before you decide to do this.
Hey, Scott, what happens with this is Chuck.
Hey, Chuck.
What happens with your customer if you lose your forward commitment because it takes you too long to build?
Well, a couple things. We don't have that problem because we build the same puzzle over and over, and we're very efficient at it. And we do build a lot of what we call speculative inventory homes that can close fairly quickly. But we have the ability to pay to extend that lock. So we can do that. And you can extend it for an unlimited period. It's just a function of how much are you going to spend. But the other thing that you could do if that home is not quite ready is you can roll that into the next forward commitment and use that allocation for another property. So hopefully it's not wasted. In some cases, it would be wasted. The buyer's not out, the builder is out. That's another reason that people want to do an analysis like Jim was talking about before they do this. Excellent question there, Chuck.
Can I jump in as well and sort of piggyback on that?
Yes,
You know,
please.
the commitment expiring and Scott and Jim are exactly right. It may not be for every builder. Some ways to sort of mitigate that. You know, like so we work with. I think we all work with builders that maybe 10, 20 homes a year, all the way up to 300, 400, whatever it is. So it seems like those smaller builders may be more at risk sometimes because they have less stuff to sell. So, you know, some of them have decided it's only on their aged inventory. It's not on every single home. It's stuff that is really has been finished maybe for a month or two that they're not selling or whatever. They legislate that. Something else that came out that was interesting is sort of, if I could, would you? We encourage the salespeople to go out there. So instead of buying the commitment and then letting it expire, which would be expensive because you pay upfront a fee and then you pay per closing. So we sort of encourage the salespeople to say, if you could get a rate around this amount, would you be interested in going ahead? And they were like, yeah. And so maybe a smaller builder might have 1 to 3 salespeople. And so they basically got a light commitment, excuse the pun, but a forward commitment from the buyer to say, yeah, gosh, if you can get me 4%, I'm in all day long. And then that builder felt confident in saying, okay, we've got at least 3 people there. Our average price is 400, so let's do 1.2 or 1.5 million, knowing that our salespeople feel pretty bullish that we can fulfill this commitment pretty easily. So as opposed to doing it and then trying to sell it, and we have worked with a builder that did it that way. Maybe took 2 weeks to get up and running with the marketing and the sales team, and it didn't end very well, unfortunately. So I think that if you forward the forward commitment, maybe with your sales team and say, if I could, would you, and get sort of a frenzy of people out there, including perhaps your favorite realtors that you know might have buyers that you know about. I think that helps mitigate the risk a little bit. What do you guys think?
Absolutely.
Yep.
Yeah.
Right on.
We're not all as clever at selling as Scott is. Clever at selling. As good at selling, not clever. That sounds okay.
One more question kind of centered around this forward commitment, and I want to move on because we had another concept that we were going to talk about. But I have Brett asking, and we talked about this, and I can't remember if it was earlier or in our pre-session. Have you had any trouble with appraisals? And if other builders in your market are doing discounts instead of the commitment, won't the appraisals catch up and become a problem?
Let me take
excellent-
that for just a second, Scott, and then you can go through the details. Because the basic principle on the appraisal side and the mortgage lending side is if this forward commitment is not identified with a specific property or specific home buyer, then it does not necessarily affect the appraisals. That's the way it doesn't affect the value. So this is a pool of money that can be used for anyone. It's not for a specific house or a specific buyer. Now those rules may change. So if those rules change, then this can all be a little different. And I'm sure Scott can go through the details a lot better now.
Yeah. Can I just jump into before Scott jumps in real quickly though, because I know that some of the builders I work with had a real challenge and prices had gone up. They probably could have lowered prices or needed to, but instead of doing that, instead of lowering the prices, working with the forward commitment was a much better way to preserve the values in the neighborhood. And it was a win-win. You know, instead of giving X amount of dollars away, they're able to protect the value and the people in the communities they sold in were much happier because values weren't lowered. So it's total win-win. But I think Scott's got even more firsthand knowledge.
More meat for that bone.
More meat for that bone. Yeah. Real world experience.
As the owner of the company I work for can tell you, I am the eternal pessimist when it comes to appraised values. And we've had issues over the years, but we sold a townhome. Again, I'm going back to May 1st for $425 and everything went fine. And then we lowered our prices down to $374.9. This is for one particular product in Colorado Springs. We lowered our prices down to $374.9. We bought the forward commitment. We started selling like hotcakes. And we were, over a 60-day period, able to raise our prices back up to 4,049, which essentially covered the cost of our forward commitment at that point in time. And I was terrified that we were going to have appraisal issues. And of all the stuff we sold, which we probably sold 20 townhomes over the course of about 40 days at that 3.75% rate, raising the price a little bit each time, getting us back up to that 4,049. I got calls from 2 appraisers out of 20 that we did. And they both were like, what do you think you're doing in a market that's not doing? And I just kind of explained what we were doing. And they're like, okay, I get it. And the buyers are the winners. So we did not have any appraisal issues. I will knock on wood. We did not have any appraisal issues as a result of raising the prices, but it has allowed us to, really dramatically cut construction interest and carrying costs, which also get factored into the total cost of the forward commitment. I mean, it's an opportunity cost type of deal, but that was an excellent question. And we have not had any issues with appraisers. So I feel very fortunate.
And Emma, before you move on, I think we're going to move on to talk about construction loan to perm as another vehicle. But one of your questions that we had originally talked about was who is this good for?
Yep.
I think that really is smart. I mean, there are certain states I work in that seem to be really booming where it just doesn't make a whole bunch of sense. Scott in the Springs and Pueblo, yeah, and we're in Wichita and Fargo and places that there's a little bit, you might need to dig deeper. In the North Carolina and Texas, where in most places things are going gangbusters, maybe you don't need to even worry about that kind of stuff. And then certain buyer profiles, that second, third move up, that luxury buyer, that to me really is more, some of them are paying cash, but it's more about the salesperson educating that buyer and getting over the fear of what the monthly investment is. If you can just show them that, yeah, even at, whatever, 7.5%, 8%, your monthly investment's approximately this, they go, all right, it's not what I want, but I'll still buy it. Whereas that first time buyer can't even buy because of the rates. And so I think that the first time buyer or second, first time moving up might be the one that you want to gear it towards. So you would know that. Is that what you found, Scott, that the first time buyers are desperate to get in?
Most of our buyers are first time or move up, or we
Right.
also do a lot of military buyers that take advantage of VA financing. Not all of them, but most of them don't have the ability to come in with a large down payment. So I think you've also, that's an excellent point.
Mm-hmm.
Yes, as a builder of choice, you're making yourself the first choice by having this program. And the people, it is binary. I'm either buying or not. It's not, I'd like to. Maybe they really literally can't afford it till you get the rate down to a number. So you're really serving a need. It's helping. It's a good thing.
Absolutely. Thank you. Yes, that's a very good point. Making sure that, again, making sure you're finding the right tools for the right buyers, for the right builders, for the right product. So that's a great point. Let's talk real quickly. I know some builders are taking advantage of this and have taken advantage of this for years and years. But we are seeing some builders that haven't normally taken advantage of construction to perm more often. So Jim, can you explain a little bit about that and maybe share what kind of builders you've seen using it in the past and what builders are starting to use it now?
Sure. So everybody realizes that custom builders are people who act as a general contractor for a homeowner who owns their own lot, that homeowner is already getting their own construction loan. And often that construction loan is combined with a permanent loan. So they only have to close on that once. And they have some certainty as to what the interest rate will be during construction and then during the permanent loan period. So that's been going on for decades. That's pretty normal. Now, builders who own their own lots and often get their own construction financing, they're finding this exact same tool to be a great deal for them to offer a discount to their potential home buyer, maybe 4 or 5% on the price, and then that home buyer gets the construction loan after buying the finished lot from the home builder, and they pay the construction loan interest, and then they have the certainty of what the interest rate is for the permanent loan as well. So it's solving a problem for home builders who are having difficulty in financing construction loans sometimes, and it's solving a problem for the home buyer because now they have certainty about what their interest rate and their payment will be after the home is finished.
And do you find there's a particular time that tool, it works best for a buyer versus a builder, or a builder versus a buyer? When would a builder choose to do that over their regular practice of doing their construction loans in-house?
It creates an administrative burden for the home builder. So if the home builder is already financing everything in-house, or they've got great construction lending relationships, it's probably not worth it. If they're struggling with their construction lending relationships or getting pre-sales, this could be a pretty good tool for them. And I expect it will become a much more utilized tool going forward. And in fact, Scott was talking about one program where it combines the construction and permanent loan with a forward commitment. So they even know what their fixed rate's going to be once the house is completed. Obviously, the better the homeowner has as far as a credit rating, you know, it'd be difficult to do with credit scores below 780, maybe 740, somewhere in there. So the homeowner has to have some decent credit as well.
So what kind of a buyer? We talked about the forward commitment being more for the first time buyer and the first time move up. What kind of buyer would the construction to perm be appropriate for?
Anyone who wants to have some certainty about their interest rate. In fact, I would see the higher the price of the home would be probably more likely that people are using these.
Okay. Thank you.
Roland,
Yeah.
Florida has used the construction perm for a long time. Just
Oh,
about,
yeah.
if I was a builder building in a community, I would use the construction perm. If I was a custom home builder, I'd use construction perm. I used to work with a number of the builders down there, and
Yeah.
they got it all figured out on how to do the construction perm better than some of the builders that might be thinking about it, because at that point, the customer is in control of the draws and the loans and so forth. And Florida was really good about fixing those kind of problems.
Yeah. I did one myself. I think I built my home in 97, 98. I think it was. I did a construction to perm loan and thought it was great. But having had experience with it, selling it, you know, I was used to doing it. So you're absolutely in Florida, in Palm Beach County. So you're absolutely right. It's an interesting thing. I really hadn't thought that deeply about it, but I know some builders I work with that are used to doing the on your land builders. We'll sort of give a choice to the buyer of what they feel comfortable with. That, you know, we can continue with the construction to perm where you're in the driver's seat, or we can do the financing for you in limited cases, but then they have to charge more. So I like what you're saying is that if they're doing the end loan, there's risk perhaps to the buyer. I never thought about that because you're not locking in the rate. It's hard to. Whereas if you do the construction loan to perm, you're already arriving at what that end rate's going to be, and you'll get an incentive to do that as well. So it's a great opportunity, I think, for home builders to look at that and say, hey, maybe we can offer either one, and then train the salespeople again to make sure that they can share it in a way that's comfortable and not give their own bias perhaps because of what they would do, but explain it evenly and say, you got this choice or this choice, which works best for you, and let the buyer feel like they're in the driver's seat. Have you seen that, Jim, or is it always one or the other?
No, I think this is going to be becoming a bigger deal. This choice is, as people have uncertainty about what their permanent loan rate is going to be. Right. And if they want to play the market and say, like last month, I don't want to close on it, but this month I do because rates are lower. Now it's time to go, right?
I can hear paper ruffling all across the country where builders are figuring out how much they would save by not paying the interest on that construction loan and what they could pass that on. And they're like, well, wait a minute now, what is that? And offer that as an incentive and yet let the buyer feel like they're in the driver's seat. So it's a very clever idea that's flexible right now for the market we're in. You've got to adapt and be nimble with it. So what a great way to present it.
Yeah, as Jim said, it's about a 3% savings on the builder side because I don't have the financing expense.
Yeah, and a complete lack of risk at that point, really, because they're just getting the buyer's getting the drawers, right? The bank gives the buyer the drawers, so it just makes it easier for everybody, I would think.
Yeah, there's some administrative problems and a little bit of risk, but they can all be mitigated as
Right.
well.
Yeah.
Excellent. What a great idea.
I have a totally unrelated question that somebody sent in. If you could give a 30-second description of what it means to have your home as treating your model like a Hollywood set. I'll give you 30 seconds.
Oh, great.
Because we're coming to the end of our. Do you want to share real
Yeah.
quickly, Roland or Scott? Either one.
I said it. It was great. Thank you, Scott, for mentioning that.
Well, so often new home salespeople, they don't really have a plan when somebody walks through the front door. With us, we treat it like it's a Hollywood set. Where are we going to stand? What are we going to say? How are we going to say it? What objections do we anticipate we will get while we're in that space? And so
Yeah.
it's all just part of a predetermined plan or script for when somebody walks through. What are we going to do in terms of the sales process? And again, learned a lot of that from Roland.
Well, if I got time to jump in, we still have a few. Yeah.
Yeah.
So I had a background in writing screenplays. I wrote one screenplay that actually got made with the actor James Earl Jones. And one of the things that got me think, I was selling real estate as I was doing the writing of screenplays. And so I think in that way, sort of visually. And so, when the customer pulls up in front of your model or design studio, whatever you're selling, what is their experience from start to finish? Like a movie, what are they experiencing? And also when you write a screenplay, you think, what is your customer's, what is the protagonist's point of view? Like, what are the different points of view? So we need to think, what's our customer's point of view? And maybe you have 3 or 4 kinds of customer. You have a first time, a move up, a luxury right sizing buyer, whatever. So what's their point of view, and create that experience for them and be aware of that. So, I love that Scott brought that up. We talk about that. You're the producer, director, actor in your movie. And if the movie set doesn't look good, who pays the price? The frontline salesperson or manager, because you haven't got your set looking perfect. So yeah, I think it's a great analogy for what we should be doing, creating that experience.
Well, thank you.
Yeah.
So I have a final question for you guys. And this wasn't on my list of questions I sent you.
Uh-oh.
It's very
I'm the
simple. What is the one thing that you hope that everybody, or that at least one person, can take from today and take action on it? So I'm going to start with Scott and then finish with Jim.
I think the one thing that people should take action from what we've talked about today is explore the different financing options. Keep the forward commitment as one of the things that you should check out and see if it's something that would work well for you in your operation. In addition to that, have a sales process, learn from somebody, a sales process like Roland. And then last but not least, Shinn Consulting, learn what they share so that you have the higher margins to be able to do this kind of stuff and really not only survive, but thrive in these challenging times for most home builders.
Wow. Thank you, Scott.
Yeah. He's good at this, isn't he?
He is.
Well, I think the question was one thing that you would take away. And he had
I had 3. I'm sorry.
That's okay.
One
Sort of
plus 2
abused your question, but all right, that's okay. So I think that actually going back to what Jim said, and I forget to remind people of this, so my one big thing is remember that you're in the driver's seat because there is a housing shortage out there. We tend to panic and react to things in a way that you don't need to. If you really have the self-confidence, self-love almost to say that people want a brand new home, they just don't think they can afford it. So how can you repackage that with the help of your financing to help them understand that? So be confident. Don't knee-jerk things and panic. And I'm going to go get this forward commitment. I have to think of it as a way of becoming a builder of choice and analyzing it and getting that best fit and realizing that people really, really want what we're selling. They really want a brand new home and that dream of home ownership. So that's that.
Thank you, Roland.
You're very welcome.
Jim.
That was one thing.
There's very little I can add to this, what's already been said. I would say make this a strategic part, a key part of your process in deciding how you want to sell homes and how you want to encourage your customers to buy them at a profit that you can live with, and make sure that you're planning for every contingency that deals with interest rates. Most of what we've been talking about today is all because we're responding to interest rates. So figure out what your process is going to be able to quickly respond to interest rates spiking up. in 1 month, or them spiking down in 1 month? And how does that affect your costs and your customers?
Wow, thank you, Jim.
Yeah.
Well, thank you guys so much for joining me today. It's been a pleasure. I've had so much fun with you guys. And thank you for joining us today for our webinar, Builder of Choice, and learning about the different financing options. If you want to learn more, you can always visit our website, builderpartnerships.com, and visit the events tab to learn more about the different classes and all the different webinars we've offered. We also will be putting this webinar up on our website, as well as turning it into a podcast. So if you prefer to listen instead of watch, you can listen to us on Be the Builder of Choice is our webinar title, or our podcast, and it's available on Spotify, Apple, and Audible. So if you have any questions or would like to contact any of these guys, let me know. You can email me directly and I'll put you in contact with any one of them. Thank you again so much. Have a great week, and we will see you next Wednesday for a webinar with Maverick on insurance. Have a great week,
Thank you for having
everybody.
us.
Cool.
Thank
you very much.
you.
Thank you so much.